Good Fed day, everybody. Dale Pinkert here with TradeGATEHub.com. Pre-Fed until the presser. There's a lot of noise that's going to happen during the presser. I think that's the real important part of today. Anything over a quarter would be a surprise to the market. I wouldn't. I'd welcome it. So I'm going to start off with currency, since this will also be published on FX Read. So looking at the euro, I've been hammering that we need 110.40 closes. Let me just put up this long-term rising falling wedge that we have here. And to declare a bottom, I need closes back over the bottom wedge line here, which is going to come in at about 10.40. So my question here is, the Fed going to provide one more decline in the euro to get long? Even though we have a confirmed low here, I do believe that we are setting up a low here. Even think that we may have bottomed in cable. Even if there's another shot down to 129, it accomplished what it had to do by taking out these lows. So the euro, if the Fed does say something pretty hawkish during the Fed presser, here's a few levels to keep an eye on. I know some people are eyeballing 109. I actually have a 78.6 level that'll come in near a wedge line break at the 78.6 level. That's 108.73. May not all happen in one day on the Fed, but just an area I'm looking at. And should we get to that 78.6, because you have to manage risk, it's the only thing we have control over in the markets, then you risk the lows under the low was 108.06. Maybe give it a little tolerance under 780. Looking at the end, this is really going to be connected to what the Fed is doing. Listeners, viewers know I've been looking for a move over 117 for since the beginning of the year, and we actually have an overthrow, which is the opposite inverse of what we have here in the euro. So you have an example here of two different wedge lines that were taken out. And the way you trade the wedge is you wait for it to be back inside the formation. And then you look for the potential of a breakout of the wedge, which would measure pretty good. The wedge line is going to come in on the upside around, say, the 113.80 level. This level is going to be very important, the 112.80. Remember, this was a significant breakdown under 112.80. So if we could recapture it, that was there'll be 61.8. It was right there at 112.84. That's going to be important. So, some people will say, well, Dale, if I wait for 110.40, I'm late. I've missed 200 pips to the upside. You're really not late, because let me ask you this question. Let me pose it to you, because this is, trading, you could have all the greatest methodologies, and you could have great technique, and you could be an excellent trader, but it's all in our heads. So let's just take the example of, you know what, Dale, I didn't get short here at the top at 122.5, and now we're here at 120. I missed a couple hundred pips from the high. I feel late. Okay, was that late? In fact, you had more confirmation, making it a higher probability outcome than trying to get the edge before the signal is actually given, even though that's my style, because I trade a lot of divergences and turning points. And while I'm up here on the euro, this recent low held above the 30 level, and we're having a decent up week, inside week right now. So, we're actually above the 2-week off number. So I teach simple things, and you'll be surprised how frequently these off numbers come in, because it's the market's memory to the left for 10 days. But we need a close in the euro over 109.30, which we're currently above. Let's see if we get a pullback. If we get any reaction from that level, that's your 2-week off number. And we close above that by Friday, you have a 2-week reversal, pretty powerful signal. The yen, talking about this rising wedge here, there is a lot of momentum here. But if we get back inside, and it may do some work here, may even push higher, we start trading back under 117.75, 117.80 on the closing candle of a daily, then you have a pretty good shot that we're back inside this formation and we could start attacking different support levels on the way down. That should equate to some type of high in the 10-year yield up here. If you notice on the 10-year on the daily, we're diverging. Some of the shorter term stuff, we're also diverging. Here's your 2-hour chart. This was a confirmed high. This is a divergent high. Maybe we're looking at drive 1 here, pullback, drive 2 here, little pullback, and maybe one more shot up towards 2.25, which would keep the yen alive for a while. Looking at euro pound, I have a lot of conviction here. So I really think even if the euro pushed back down to new lows, which I'm not expecting, that euro pound won't. And what you have to do now is, let me just update the fib since we made a new high, is that you want to look for fib retracement levels if the dollar pops. Okay, so we really only we haven't even retraced 38%. Maybe we get a 61.8, 50%, 61.8. I'd begin a scale in campaign trade down here because I think the EG already signaled a very important bottom. I don't think we're going to see those lows again. That would surprise me. So I'm looking to buy a pullback of this recent rally, which was a little over 250 pips, 240 pips. So, 140 back, 83.30, 130 back, 61.8. So I'd start buying at, because I don't expect, especially if euro doesn't make a new low, it'd be more bullish if we held even the 38.2. But I think there's a shot for 50. I'd put a piece on here. I'd put a piece on at 61.8. I'd put a piece on at 78.6 and be wrong under the low. So a lot of conviction on that trade. And going into something I think is interesting to look at, the Aussie has held up the best, has had the best performance, and the yen might be near a peak. So I just want to show you something that you want to put on your watch list. So a lot of people would say we're on the verge of a major breakout here. And I am looking for, us to trade over 86.25. That was this high. And I'll wait for a reversal because it could end up being, the end of a move. And then, so look at this as being a 3. And then when I go to a 4-hour, it's a different chart, but here we are. We even have better divergences here on the 4-hour chart. So what I'm saying is the weekly is the bigger picture, and the wave that's forming now on the weekly is a fractal of the weekly. So something, if you're trying to learn how to work with 3 drive formations, something to keep in mind is that sometimes at the third will be a 3 combination. So just keeping an eye on that at new highs and see if I get some type of reversal signals. I think people are pretty long Aussie. Maybe Aussie doesn't perform as well. We have had a pretty good break in the crude oil market. So when you look at the weekly, I thought we could trade down to 80, 85. We might get a counter trend rally here though. That's been one heck of a break. You're talking about $36. So why can't we rally back 18.20 back to 110? I know some people thought we might trade 120, but be careful about a crude short here. I'd be waiting for some type of fib retracement, which could take it sharply higher. So maybe some of the optimism that we're getting out of Ukraine and Russia, which is why the euro's up today, diminishes, and we get some type of pop in the oil. As long as we're talking about oil, I brought it up on the show with Mike yesterday, and this is going to be a pretty key thing for the dollar, is that Saudi is considering taking other currencies being paid in wons, the Chinese yuan, for oil. And the dollar has been a petro currency for, I don't know how far back, was it Eisenhower or Nixon? May have been before that, where they had, it creates demand for dollars if the Saudis only will take payment in them, because people have to convert to the dollar. So just wanted to talk about the fact that, there are some fundamentals that could be building towards what I'm seeing technically as potentially this being a failing rally eventually, and a pretty good break in the dollar, maybe something like this. The other thing that long term is most likely negative is how the US weaponized the SWIFT system and the current banking system, and people, nations are going to be concerned about it happening to them. So, people are going to want to start moving away, de-dollarize commodity transactions. And that's the first time the Saudis have made a statement like that. So, you guys know I wasn't a dollar bear until we got above the 98 level. We stretched to 99.40. And my focus is on looking for reasons to sell the dollar, no longer to buy the dollar. Even if we push up towards 100, I'm looking for those reasons. Gold has to hold the 1880 level, or this is going to look like a false breakout. Silver, I know some guys that would love to be able to have a chance to buy silver where these two moving averages converge around the $24 level. Maybe the Fed will provide that. I still remain negative copper, and I think that any rally, just like crude, could end up being a failing rally in copper. So I know some people looking for 6. I say before we get to 6, we visit the low 3s first. I could see how they could come up with it because there's only 2 drives here, but to me, copper looks vulnerable. And why don't we wrap it with the S&Ps? They're on the verge of a pretty important breakout. We've been in this wedge formation for a while. I really thought that when we were here, that most likely we were going to try the downside of the wedge, but I was on with Mike, and Mike started talking about yesterday the huge volume coming in. And then I went over, some of the issues that I watch. It had, starting with the NASDAQ, which, made a new low here, that there was massive divergence here in NASDAQ. This is setting up to be a nice tradable bottom. And even if we're not going to go to new highs in the NASDAQ, why can't we see 15,000 here? So we looked at some individual issues, and they looked okay as well. Similar action in what's happening. Apple is something that Mike and I talked about, it taking out the 200-day before it turned. We'll see if he acted on it. I'd have stops under the low of this, and how Microsoft had a nice little turn. Everything looks like it turned yesterday. I'm not saying that I don't reserve the right to change my mind, but nice turn there. And what would probably be the most contrarian trade on the board in front of the Fed would be buying bonds, because they've been slaughtered. They're leaving gaps on the downside. This could end up being a sell the rumor buy the fact. I'm not looking for a new bull market in bonds and treasuries, but we could be setting up a tradable low that could take us back into the 140s. So that's something to keep an eye on. And if this call is correct and we get a bond rally and we get a 10-year yield top, it will also be setting up the shorts in US dollar yen. So have a plan going into the Fed. That's Michael's favorite word, plan. And I hope that what we're doing here, posting these videos on YouTube, you guys, is adding value to what you're trying to accomplish in a very difficult task of becoming a trader and making a living off the markets. We're here to help you on that journey. So drop in, share your charts at TradeGATEHub.com. And tomorrow I'll be interviewing Thomas Malinen from Finland, who's looking for 6 Fed rate hikes, who was bullish gold before the recent run, and has some things from his perspective in Finland. I'll give you a hint, he likes Texas. So that's a wrap for me. Mike's going to be on in looks like an hour and 15 minutes. Don't miss him. And wish everyone a great trading day. And don't just count your pips, count your blessings. I'll be back with you for an interview tomorrow with MT Malinen from Finland live. Adios.